Hi, everyone. I'm Kalila Reynolds, and welcome to another edition of Taking Stock Live. For me, it's the vacation edition, coming into you live and direct from Runaway Bay in St. Anna. I had to cut my vacation a little bit short, not cutting short, but, interrupt my vacation to be with you tonight, because we have a lot to talk about. Preference shares going on and all these good things. We have to hear what this is all about. And PBS is a company that we haven't really spoken about on this show. So let me know in the comments where you're joining us from this evening, and I can give you a little shout out when we come back. First, let's take a look at what's hot in business and also what's coming up in tonight's show.
One of the largest tech firms in the Caribbean, Productive Business Solutions (PBS), is issuing US dollar and Jamaican dollar cumulative redeemable preference shares. Shares are priced at $10 with quarterly dividends at 9.25% and 1,000 Jamaican dollars with quarterly dividends at 10.5%. We'll explain what this all means and whether this could be a good investment for you. And the analysts weigh in on the latest market developments. The analysts give their take on PBS's new offer. NCB Financial Group is reporting an 86% increase in consolidated net profits for the 9 months ending June 2022. Wow! And financial experts are questioning whether the United States is indeed in a recession. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
JMD Group acquired its first commercial bank in the Dominican Republic last week. The company announced that it has received final regulatory approval to buy 100% of the shares in Banco Multipobel Bank S.A. The bank will merge with Banco Ahorro y Credito, JMB Bank S.A., a savings and loan bank acquired by JMB Group in 2014. The bank can now expand its offerings in the Dominican Republic as an integrated financial services provider. CEO of JMB Group Keith Duncan said the acquisition and merger complement the company's regional diversification strategy. The group said the merger is expected to take place within the next 6 months or based on operational readiness. Alliance Financial Services is partnering with Unicommerce Jamaica to expand its MoneyGram agent network by almost 50%. AFS is a primary agent of MoneyGram locally. The new partnership will allow MoneyGram customers to pick up their money transfers at Quartz stores island-wide. According to Alliance, the partnership will add 28 Quartz stores to its over 50 sub-agents and 5 Alliance offices island-wide. Access Financial Service has received approval from the Bank of Jamaica to operate as a microfinance institution. Effective July 30 under the Microcredit Act 2021, all microfinance institutions operating in Jamaica must have a license from the BOJ or have applied for one. The act was introduced to regulate microfinance institutions and provide greater financial inclusion, better customer service, and greater disclosure to customers. Access's approval means that it is allowed to provide microcredit services such as loans or business advisory services to individuals and MSMEs. Financial technology company Robinhood says it's cutting its workforce by 23%. The company had already laid off 9% of its workforce in April. According to the company's CEO, the job cuts were brought on by the deterioration of the macro environment, coupled with U.S. inflation being at a 40-year high, as well as a crypto market crash. The job cuts were announced on the same day as Robinhood's earnings, which also didn't go well. The report showed a decline in monthly active users and a fall in the number of investments people are making. What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart.
This segment of Taking Stock is brought to you by Bulwark Insurance Agency. Insurance made easy. Welcome back. Let's get this party started. And first, let me big out everybody who is commenting, who is in the comments and telling us where they are joining us from. So we have, let me see who we have here first. Javon Russell says, St. Mary checking in. Preference shares is definitely a good investment to obtain constant cash flow, but the question is always which one is best to buy into. We're going to find out all about the PBS preference shares this evening. And then D says, I was happy when you dropped the PBS preference newsletter that went out, I think this morning. I immediately started planning how much to buy and how to get in. Chris Hill says, hello from Panama City. I was just in your city, Chris. Last week, I almost got stranded in Panama City. Fortunately, I made it and I'm back here in Jamaica to do the show. Natoya says, checking in from BIM, homesick, but I can't afford to miss out. You're having some nice flying fish down there, Natoya. And then Kish says, love the look of PBS, been perusing the prospectus for a few hours. And he also adds that with a 10.5% or 9.25% returns, you can't go wrong. The last time I saw such high returns is well over 10 years ago. The company appears to be well established. So we're going to talk about it. And shout out Adrian, who was the first person to comment in the show tonight. Adrian Legister checking in from Westmoreland. And he says, let's get this money. So let's get right to the money indeed. Let me see what we have here. Well, I've been telling you all about the PBS preference shares. I'm also going to have a short video explaining it on TikTok and on Instagram tomorrow. But in the meantime, we're going to be getting a lot of good information this evening. PBS is actually one of the largest tech firms in not just Jamaica, not just the Caribbean, but the Caribbean and Central America. That's Productive Business Solutions, PBS. And they're issuing both USD and JMD cumulative redeemable preference shares. We're going to explain what all of that means, because this is not a type of instrument that many of you might be familiar with. You're used to your IPOs, your ordinary shares. You may have heard of preference shares, but cumulative redeemable preference shares, what does that mean? We'll break it all down for you. As we mentioned in the introduction, the shares are priced at $10 for the US dollar shares, and those pay quarterly dividends of 9.25%. And for the JMD shares, those are priced at $1,000, and those pay quarterly dividends at 10.5%. And this offer opens on Friday right here, which is the 12th day of August. So joining me now to explain what all of this means and whether this could be a good investment for you, we have Director and Chief Executive Officer of Productive Business Solutions, Pedro Paris. And we also have Corporate Manager of the Western Region at JMB Capital Markets, Doyle Smith. Hi, Pedro. Hi, Doyle. Welcome to the show.
Hi, Kalila.
Hi,
It is
Kalila.
great to have you. So you're both
Likewise.
in Jamaica. You're both in Jamaica today?
Well, I happen to be in Jamaica today. We have a kickoff with the Caribbean team, so glad to be here.
Where are you normally based, Pedro?
I am Costa Rican born. I
Ah,
live in Guatemala where my kids are. But as you can
ah,
see, with the footprint of PBS, I do a lot of travel.
yes. I was just in Guatemala City last week as well.
Oh, really?
Yes, I'm from Belize, so you know,
Oh,
Guatemala nearby, right? And Doyle, where are you? I see it says the western end,
Yeah, I'm based in Montego Bay.
Montego Bay. See, I love how the internet just brings us all together, no matter where we are.
even
So,
though we're in
Pedro,
the
let's
same city.
exactly. So I'm in Runaway Bay today.
Yeah.
Normally I'm in Kingston. But Pedro, let's start with PBS, because you're listed on the main market. You've been there for a while, but it's
Yeah.
not one of the more popular companies when it comes to, what's often reported in the news and what people always talk about when it comes to the stock market. So give us a background about PBS, who you are and what do you do?
Well, I can say that PBS is a quiet giant and that we are continuously evolving. And if you let me, Kalila, do some slide to explain the audience what PBS is. If you allow me 1 second to share my screen, I would love
Sure.
to. I'd love to go over it. So let me start by saying that PBS is a solution-oriented technology group, and we are in multiple verticals: governments, banks, insurance, transportation, retail, small and medium business, industrial corporations, manufacturing and distribution. So we have a large base of well-established clients. We are B2B. And as that being said, um, we have an unmatched footprint. We are in 19 countries where we have a significant um, presence in the business of these um, countries and islands, where we are present in most everyday life, whether it's a credit card, an ATM, whether it's a bill receipt, whether it's a contract prepared by a lawyer, or whether are security machines on airports and ports. We have a broad portfolio in on this unmatched platform of countries. Um, so I'm here, right, in Jamaica, and PBS is all about people. And this is a business people. It's about retaining people. It's about grooming people. That get us to be a better company, as you have seen over the past couple of years. And we remain focused. PBS is not a complete company. We are a work in progress. As you know, we acquired in the middle of the pandemic Massey Technologies that later
Right.
became PBS Technologies, right? So then we became bigger, but bigger, I mean, bigger for our employees means better agreements with agencies, better pricing structures, means better training, being more important to relevant brands, and of course, in the end, bigger is important for investors and the rest of the stakeholders that are part of this family. Sometimes, um, as you know, PBS started when we acquired Xerox operation in various countries. But after a long tenure, we are in 6 divisions of business lines. One is the professional services that we do, and this is related of everything that we install. We gotta perform maintenance activities. This is our best pre-sale strategy. Our communications divisions run everything around networking and security. Our printing systems is everything around supplies and imaging. Our advanced services runs on solving major critical business technology issues around brands like Oracle, VMware, and Red Hat. Our information technology, of course, it couldn't be um, more powerful around Lenovo, Dell, HP, and NCR, which we lead the region with more than 80% of the market share in the Caribbean with the ATMs that are installed across the board. And of course, security system, we just are working on the needs in Jamaica and the needs
Right. Yes, you
in
have the
Barbados.
contract for
Yeah,
national identification system. That's
yes.
big. That's huge.
And we're doing some of it in Guatemala as well. And you see the brand in the right called Labels. This is an American company that is a leading provider for airports. And I don't know if you're aware, but there is a trend on the transformation of the checkpoints to make travel more seamless, whether there are um, e-gates that are now systems with bigger trays, and now in these bigger trays you can put your liquids that you weren't allowed before, and now you don't have to take out your computer. So the throughput on these systems on an airport is going to be faster. And we landed a major contract, one of the biggest airports in the region. And so I can tell you, I mean, I only have a little bit of time, but if I go over all this, I mean, I can talk for weeks. As you can imagine, I'm very passionate about my
I'm
company.
sure. I'm sure.
Very passionate.
And
But Given
And let me
this,
tell you, before this offer, I didn't have a very comprehensive knowledge of what PBS actually does. I know you're a giant across the region. I knew that much. I know you're listed, the only tech firm on the Jamaica Stock Exchange on the main market, but I didn't know the range of services that you actually offer. So you have the national identification projects, like you mentioned, airport scanning, container scanning, support for all of these customers and large clients. I see you had like Lenovo and Dell, Xerox. What do you do for those clients?
well, I'm just going to put an example. The largest retailer in the world that has 950 stores in Central America. We have 200 dedicated professionals to them, where we are provide level 2 support on everything that breaks in their stores throughout 5 countries in Central America. We will replace it or fix it. And as you would imagine, with this reach, then it's cheaper for them to buy the products from PBS. So it turned out to be one of PBS largest clients. So when you talk about Oracle, we provide mission critical systems for banks and governments. We provide databases um, with maximizing on the Oracle stack, and we are the largest Oracle partner in Central America. Then you have Xerox, and we have 31,000 multifunctional devices around the region, and soon to be 33,000 when they fix their logistics problems. So when you see a brand like Entrust Data Card, these are the machines that are mostly used for banks to produce debit and credit cards. So it's very broad.
Yes, and somebody just commented that you do the point of sale, hardware and infrastructure for networks, ABMs, card embossing. So it's just a wide range of things. We're actually talking about 224 million US dollars in revenues for 2021, which was your best year ever. Why do you think that was last year?
Well, it's a combination. In 2020, I have a great team of managers. Our revenue went from 180 to 160. And then after the pandemic, we saw a lot of business coming from various entities that were a little bit, um, like in a need for change, like ministers of educations, like banks, and as you can imagine, um, people prefer to interact with an ATM rather than to go to a branch. So we have an opportunity there, and we seize it, and we took it. And in terms of our our results of 2021, as you know, we acquired Massive Technologies Infocom, and um, the numbers that came from them are also the from September to December, only 4 months, and the combination of the acquisition of Masi, our business dealings with the various government of the regions, the different projects, and our banking operations led us to this record results.
Ah, yes, yes. So you had only one quarter of Massey's numbers in those results, and I see that you're projecting 300 million for this year with 10 million in net profits. Would that be largely as a result of the full Massey impact?
Well, it will be a combination between what we do in other markets and what we do in with the acquisition that we are working to complete every every day and improve things. So you know that PBS presence in Jamaica is our revenues are only 9% of our aggregate um, total for the company. 40% of our income is in US dollars, and 51 is in other currencies. So I see that this is very attractive for the investors. So with that being said, PBS, as I said before, is about people. And as you can see my screen, some of our operations in Central America, specifically the one that we have in Costa Rica, was um, um, named by Forbes number 3, and our operation in Salvador number 18. So at the best companies. So we have a rounded operation in very large markets, and as such, our vision, Kalia, is that, and I have to mention my boss, as you can imagine.
Mm-hmm.
This is such a prominent businessman here in Jamaica that after we acquired Massey, he said that together with PBS Technology, after we rename it as after the acquisition, we create an unrivaled platform that covers the Caribbean and Central America and Colombia. And we have a huge resources. We will serve our clients with the best SLAs in the region. We have exceptional value of the best technology portfolio there is in the region.
All right, so I have a question from Javon Russell, and Javon wants to know, what will the funds raised from this preference share offer be used for? He also has another question about the frequency of the dividends, but I'm going to come to that later. Doyle, I'm going to ask you to jump in there when we discuss the actual offer. So first, to you, Pedro, what will the funds raised from this offer be used for?
Well, our parent company has a great um, mergers and acquisitions team, and they have been very active. And we work together with a team of qualified professionals. We have also an office in Miami where we have our group CFO and very diligent people there. And we are always assessing opportunities. And as a matter of fact, we have um, the opportunity to to integrate two companies into the PBS systems over the next um, quarters, I'll say, and this issuance is very important for us to um, integrate companies into what we have, which is a very powerful platform. And that's why we think that um, this capital placement will make us stronger in terms of the possibility to perform inorganic growth.
So more mergers and acquisitions, new territories. So you're going beyond the 19?
Well, I can tell you that we we have a little bit of everything, but I can tell you that in the short term are going to be around where we are.
Okay. Well, let's bring Doyle in. We need to talk about the actual offer now. And I'm going to start with a question from one of our viewers. This is from D. And D says, it's important to highlight that the PBS preference shares are perpetual, which I think is new on the market. Correct me if I'm wrong. So let's start there. These are perpetual, cumulative, redeemable preference shares. Explain what that is.
So it's not the first time this offer has happened on the market in terms of a perpetual preference shares. It's the first time in a very long time. I'd say probably a decade or so. The reason why it's seen as perpetual is that, similar to common stock, there's no maturity date. One of the things that in talking to investors they had mentioned in the past is that sometimes they see an offer that is like a corporate bond or something similar at a really great rate. What will happen is that interest rates go down and the company will call the bond, right? So the advantage of this is that it provides a long-term income stream that an investor can depend on for 3, 4, 5 years, depending on whatever the outlook is. And then because it's listed on the exchange, If the investor wishes to, for whatever reason, maybe they reach their time horizon, look to sell the preference shares, they can sell it on the exchange just like a stock.
Right, but then the disadvantage is that you don't know when you're going to call it. I think I saw in the prospectus that you're going to give like 6 weeks notice, and because it is redeemable, you have the option to call it at any time, no?
After 15 years.
After
So
15
after
years.
15 years, so there is a very, very long time that an investor can count on the dividend stream before PBS would have the chance to call it. And as a note, they can call it. So it's optional. They may actually not call it, but it's not before 15 years. So we're probably looking at 2037 before an investor who is very happy with the returns would even have to consider whether the returns might actually, from a timing perspective, be getting close.
Interesting. Wow. All right. So we're looking at a long-term opportunity here at a fairly high interest rate. Let me see. I saw a comment about interest rate earlier. I don't know what I did with it. All right. So I guess I removed it. But yeah, talk to us about these interest rates. So why this level of interest? So 10.5% on the JMD and 9.25% on the USD, which is on the higher end of the spectrum.
True. It would be seen on the higher end of the spectrum, but it's also on the longer end of the spectrum. Most of the instruments generally available to investors are on the shorter part of the yield curve. This is priced very well based on the tenure and amount of time, and also by virtue of the fact that it's a little bit new. Therefore, PBS decided to add a bit of a sweetener for potential investors that they may be doing this for the first time. They wanted to make it attractive. They have really, really strong growth plans. They have specific acquisition targets they want to pursue. So therefore, they look to make it be something that investors would find beneficial to add to their long-term portfolio.
Mm. So I noticed in the prospectus there's a phrase, and this phrase is used commonly, and it says that the directors will consider a dividend. So does that mean that the dividends may or may not be paid, or is it guaranteed that the dividends will be paid quarterly?
Great question. Uh, the answer is actually in the title that it's cumulative. Now, it's standard language for that to be in the definition, in that it can be paid depending on the directors. However, because it's cumulative, it means that the dividends, if not paid in any given quarter, roll into the next quarter and is still due and payable. Therefore, an investor can look for, if it's not for whatever reason, let's say that 14 years down the road, the company hits another like COVID challenge, something that's completely unforeseen, and for that quarter, that they're not able to pay the dividends. It may mean that they defer it, but it's cumulative, and therefore it will add in and roll forward.
Ah, okay. All right. So if you don't get it this quarter, you're going to get it whenever the next dividends are paid. And preference shares mean that you get preference over ordinary shareholders. So ordinary shareholders aren't paid, you're going to get paid your preference shares. You're going to get your dividends. So I have a math question here from Pretty Motivates, who wants to know, if I invest $100,000, I'm assuming that would be the JMD, what will I get in dividends in JMD? Yeah, she said it, if the price stays the same.
You will get in dividends 10.5%. So for 100,000, you can look at 10,500 in
Per year.
dividends per year, payable quarterly. So divided by 4.
All right. So for the full year, you get 10,500 in dividends, and divided by 4, because it's payable quarterly, you're looking at about maybe $2,750 per quarter on your $100,000. And remember, these go for 15 years minimum. So it's a long-term play when you're looking at this type of investment. Let me see. We have some other questions here from our viewers. I think we have some for Pedro. Kish wants to know, I'm not sure who will take this. Kish wants to know, question, why are the shares not bought on par?
Uh, to answer that question, the shares are at par. Par being $10 US per preference share for the US issuance, and also $1,000. But it's a pretty good question. Par is actually a bond term as compared to a preference share term. So a preference share is treated very similar to a stock. So, a stock unit is at X amount, right? So, Grace Kennedy, JMB, etc., is at X amount. And therefore, the price is based on the price for the share.
Okay. Question for Pedro. This one comes from Elaine. With a pending recession, how is PBS's position to weather the storm and protect the interest of its product and investors?
Well, we did it once with COVID, and was complicated. Markets that we operate closed, and our revenues went, as I explained before, from 180 million to 160 million. Even in that period of there was a very complicated year, the company was able to maintain balance. So, and became stronger because in the end, as you can see, we went through a lot of studies about our cost structure, and in the end, in 2021, we came super strong. And now we have 19 countries. We have more than 5 operations above $5 million of EBITDA level. We think that we have a very balanced um, um, streams of revenue, and our portfolio, as I mentioned before, give us enormous opportunities, and we are just starting. The last point to finish is we have to care about our people, and if our people is trained, if our people is motivated, if our people sees a career path where we uh, prefer to promote from within, then we're going to have 2,000 warriors out there that are going to go and fight very hard for every stakeholder that is part of this great company.
Mm. The next question comes from Almighty, who says PBS has a very high level of debt. Will this new preference share being offered be used to pay off debtors? Pedro, you can
Well,
take that one.
well, that after we do this capital placement on these pref shares, our current debt to equity is 1.7. After this project, our ratio will drop to 1.10. So, um, as I said before, we are exploring very interesting opportunities. I'll say unique, and some of this may or not happen because we're very careful with others people's money. And if they don't happen, then the option of paying debt is a possibility.
All right, Doyle, talk to us now about how people can participate in this offer. I did notice, and I forgot to mention at the beginning, that these are actually going to be listed both on the Jamaica Stock Exchange and the Barbados Stock Exchange.
Yes, correct. The easiest way to participate is that you can subscribe. The offer opens on Friday. I believe you pointed that out earlier, so that's great. Offer open on Friday. It will be available on JMB's Moneyline. Therefore, it's online. It's an online subscription, and it's also will be available at Barito, who's a selling agent for the offering, on their online boss system. Therefore, it's pretty easy to actually get access to the offer via either of those systems.
Okay, so JMMB or Barita Boss, those are the two
Yes,
agents.
yes.
All right, I see. I'm going to take this one last question that just came in, and it comes from D. This question is for Pedro. I reviewed the prospectus today and saw that for fiscal years 2017, 18, 19, and 20, PBS reported low net income or a loss for those years. Can you shed light on what happened?
Well, that question is for me. And we have, when we became a public in 2017, we have one year where we lost $4 million, and we lost $3 million, and then we make uh, $2 million of profit after tax. Then COVID came, and after that, we came out in 2021 with $5.5 million of PAT. So it's very important, the transaction that we did acquiring Massive Technologies, where we have a lot of opportunity, and because we have a chance to generate important economies of scale. If you see our Q1 performance compared to the year before, if you see Q4 last year compared to the quarter before, which is important, which was the quarter when we run Massey into our system, rename it PBS Technologies, you can see that that created a more deeper bench of countries, being in Trinidad, give us where the company has a very imponent presence, and where we have two operations, our PBS group and the Massey in Barbados, and the one in Jamaica, the one in Barbados. So we can generate a lot of economies of scale. And I think that's where we see now.
Well, I want to thank you so much for joining me this evening, Pedro and Doyle. All the best on this offer when it opens on Friday.
Well, I hope we can have another interaction of this after the investors happily went after our issuance.
Awesome. So I'm eager to hear what the analysts have to say about this particular offer. We're going to hear from them shortly. But first, here is your market recap.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Time now for your market recap. The JC Combined Index declined last week, falling by 3,000 points or almost 1%. 118 stocks traded across the main and the junior markets for the week ending Friday, August 5, 2022. 31 advanced, 73 declined, and 14 stayed the same. 175 million shares changed hands on the Jamaican dollar market, valued at almost $770 million. SSLVC was the most traded stock, taking up more than half of market volume. People bought and sold 93 million shares in the company. The stock opened this week at $3.45. Wigged and Wind Farm ordinary shares traded at the second highest volume, with people buying and selling 17 million shares in the company. The stock's price lost 1 cent to open this week at 50 cents. And Mayberry Investments rounded out the most traded, taking up 4% of market volume with 7 million shares trading. The stock's price lost 86 cents to open this week at $9.50. Now let's see who had the biggest gains for the week. 138 Student Living Variable Preference was last week's biggest gainer, up 39% to open the new week at $58.02. T-Tech is up 12% to open this new week at $3.50. And rounding out our biggest gains, General Accident Insurance Company is up almost 9% to open the new week at $5.51. On the losing side now, Cygnus Real Estate Financial USD was last week's biggest loser, down 19% to open Monday at 11 cents US. JMMB Group 6% USD was the second biggest loser, falling 15% to close last week at 94 cents US. And PBS USD was down 12% to close last week at $1 US. Over on the Trinidad and Tobago Stock Exchange, the composite index declined by 9 points last week. National Enterprises was the most traded stock. It opened this week at $3.25 TT. LJ Williams Limited was the market's biggest gainer, up almost 7%, to open this week at $2.15 TT. And on the losing side, Angostura Holdings fell 7% to open the new week at $25.10 TT. Over in the US, the Dow Jones was up slightly last week, while the S&P 500 gained almost 1%, and the Nasdaq rose almost 3%. Over at the pumps, there was a slight dip in fuel prices last week as gas prices fell 27 and 28 cents, while diesel prices also fell by 25 cents. In foreign exchange, it took an average $153.71 Jamaican to purchase $1 last Friday. And on the crypto markets, Bitcoin gained almost 6% in the past 5 days, trading at $24,179 on Monday, while Ethereum is up 11% in the past 5 days, trading at $1,798 on Monday. This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers.
All right, welcome back. Welcome back. Be sure to take our poll tonight as well. So tonight's poll question can be taken on YouTube or on Twitter. And the question is, will you be participating in the PBS, what's the word? Perpetual cumulative redeemable preference share offer. It's so many words, it's a mouthful. So I need to understand more first. I think a lot was explained just now. B, yes, why not? More opportunity to make money. C, not interested. Or D, other. Take our poll question on YouTube or on Twitter. And let me take a few of your comments so far as well. Elrico says, hello from Belize. Hi, Elrico. Good to see you in my country. And then Ryan says, PBS shares sound like JPS preference shares with 9% at $1,245. Never up for sale. You know, there are certain types of shares, especially these preference, that people hold on to, and they just hold on to it for dear life. They never sell those shares and rarely available for sale. So just think about it. The interest rate alone, it is one of these rare opportunities. But let's hear what the analysts actually think about this offer. So our analyst panel this evening is comprised of investment research and sovereign risk analyst at JMB Group, Leovani Dillon, and founder and CEO of Profit Jumpstarter, Keisha Bailey. Hello, good evening, welcome. Leo, how are you?
Hi. Yeah, man.
All right, so how you guys doing this evening?
Good.
All right, let's start with you, Leo. And you are a disclaimer, you're part of JMMP Group, and
Yeah.
JMMP is the one that is managing this transaction. So let's just put that out there. But what are your thoughts on this offer?
I mean, it has its place. It's not for everybody. So of course, it's 15 years. Somewhat stable income, or at least that is the goal of the offer. So if you're looking for that, then it might be for you. Of course, with such a long tenure, with any asset, with such a long tenure comes significant interest rate risk. So basically, what can happen? I'm not saying that this is going to happen because I actually think it's a low case scenario. But what could happen in theory is that interest rates skyrocket to the point where it becomes unattractive and the value actually declines. So for argument's sake, not saying this is going to happen, so no fear mongering, but if interest rates for argument's sake were supposed to skyrocket to like let's say 12, 13%, then you can understand that it would become very unattractive. So that's the risk you run with an offer like this because of that tenure. So of course, if you had a similar rate, but let's say a 2-year note, then the risk wouldn't be as high because in 2 years it matures, you get back your money and you can reinvest at a higher rate. So that's an innate risk with something like this. But that being said, it's for each investor now to decide, talk to their wealth advisor and figure out whether or not this is for them in terms of what they're looking for in their risk tolerance. Because as you had indicated, with it being a cumulative redeemable preference share, while if you miss one payment, the dividends accumulate, which is the cumulative part of the name. The thing is, it's not a guarantee. So there's no what I kind of know, nothing like a bond where you'd have covenants and you'd have breach of covenants or other issues if you don't make a payment. So that means you could have a delayed payment. So it's like you have to understand the full gamut of risks that come with it and say whether or not this is something that you want to add to your portfolio.
So Keisha, Leo started off by saying it has its place. So who is this type of offer for?
All right. So when we think about preference shares, because you don't typically have very high, or if you even have any voting rights, they provide good passive income streams, but it is a fixed rate, fixed dividend rate that's offered. So if you like passive income, I personally like the rate. I think when we compare it to US inflation, which is 9.1% being the most recent number, but we have new numbers coming out tomorrow. The 9.25% dividend rate is very attractive because you are getting an annual rate of return that's very comparable to inflation. Yes, you do have interest rate risk, but I don't believe that we're going to the moon in terms of interest rates. Very low probability of that. So it is a nice, healthy stream on the US dollar side. When we think about Jamaican dollar inflation, it's 10.9% currently. And so a 10.5% dividend rate is very good if you're thinking about that as well. So preference shares are very good passive income streams. You can think about it that way if you just want consistent income coming in on a quarterly basis. This is a nice, not financial advice, but this would be a nice security to have on that purpose.
Right. So this is good for the person who wants a steady stream of dividends. Is this more for a conservative investor, would you say?
Well, so my views on conservatism are very different from Leo's views, because I view it in terms of the goal. And so I can't be conservative if I don't reach my goal. But for someone very close to their financial goals, yes, you could have this as that additional sweetener. Correct point. I saw someone commenting that, yes, you can have variable and fixed rate dividend rates for sure, but this one is fixed. But so you have that element of interest rate risk. But this would be good for the person looking for passive income who is very close to reaching their financial goals. Persons looking for growth, this would not be that type of investment for you if that's what you're looking for, because you're not going to get that massive appreciation in share price as you would on ordinary shares.
Yes. Very important to highlight that. So I have a question that came in outside of the comments, and this question is for Leo. It says, Leo, are the current interest rates more likely to be lower in the future based on Jamaica's growth path?
Yeah, so as it is right now, I think there's a low probability that it's going to go materially higher because you're already seeing signs of the inflation pressures kind of abating. So, for example, you can see the fall off in commodity prices and so forth. So that would actually be, for example, a positive for this kind of note. Because again, if interest rates are supposed to, for argument's sake, let's do the flip. So if you buy into this note and in a few days or a few years, for argument's sake, interest rates collapse, right? This is a brilliant note. So you can understand, and this is the thing about investments, in general, when you look at different asset classes or whatever, there is a benefit, advantage, and a disadvantage. So it's up to the individual investor, talking to the advisor and their outlook in order to gauge what is the best investment for that. So you can see, while if interest rates were again supposed to skyrocket, this would be bad. If interest rates were supposed to significantly fall, this would be a brilliant investment. So it kind of depends on where your outlook is an investor, what you're willing to tolerate. So let's say, for argument's sake, you're, of the view, you talk to your advisor and you say, all right, I see commodity prices coming in. I see a potential recession risk, or that could be some, thing that bring in interest rates a bit. In order to, different, central banks reducing interest rates to get the economies going, or at least not hiking it, right? Then this would be a brilliant investment. So, it's up for the investors to kind of make that call. So there is a place for it. So I'm just really trying to provide the full information for investors to kind of, have that the information in their pocket to talk to their advisor from an informed point of view in order to reach that final conclusion that's best for them. Because again, for everybody, there's going to be individual needs that vary, depending on, how old you are, how young you are, in terms of your risk tolerance. There's a whole lot of factors Of course, I can't touch, everybody's thing here. Yeah, these are the
Naturally.
scenarios that this is brilliant.
Orville is asking, well, he's making a point, and Orville says you have to drop a couple mil for significant dividends. Keisha, would you agree with that? That if you are in it
Yeah.
for a dividend play like this, that it doesn't make sense if you don't have a couple mil at least to put into it?
Yeah, definitely. And we can just work back the numbers. We know that it's going to be 10.5% on Jamaican dollars. So you can work back to your income target. How much money do you want to receive off of this preference share per year? Do the numbers, do the math, get the math to be mathing, and then you'll be able to see how much you need to put in. But it is possible to have a decent amount of income coming in. Decent is relative. What I may require may be different from another person. So do your personal calculations and go in for the amount. But I do believe an investment like this does play a role in an overall portfolio that you construct. You do want some element of preference shares, and fixed rate preference shares are good. They serve a purpose. We just don't know if the purpose for you is ideal, but they do serve a purpose in a portfolio.
See, and the thing is as well, I feel like I forgot what I was gonna say. I completely lost my thought. But yeah, it does have its place, like Leo was saying earlier. And when you have a fixed rate cumulative, the disadvantage, I remember my point now, the disadvantage is that you don't have access to that money for an extended period of time, possibly 15 years plus, as they mentioned. So if you need back your money at any point in time, well, what you could possibly do is try to sell the shares on the open market since they're listed. There's no guarantee that there'll be anyone who's willing to buy, since these types of shares don't trade very, very often. But that would be a major disadvantage. But on the positive side, if you have money just sitting around, and I know a lot of people have US dollar accounts, that they just have US dollar accounts, they're just sitting there
Yes.
doing nothing, right? And that really is just a play versus depreciation of the Jamaican dollar. And you just put money in your US dollar account whenever you have US
Yeah.
dollars. It could be a way to put that money to work if that money is just sitting there doing nothing, huh?
Yeah, I agree for sure. It does play that purpose. It's a better return than a shorter term savings account for sure.
Right.
Again, it comes back into the role that this particular investment would play in your overall portfolio, and having that discussion with the advisor to see what role should this play for me, and then making the investment from there.
All right, let's touch a couple other topics quickly. Leo, we want to look at NCB Financial Group's performance. They're reporting an 86% in consolidated net profits for 9 months ending June 20, 2022. 86% sounds pretty good. Is it as good as it sounds?
Yeah, it is a good number. So remember, they're coming off a low base in terms of the 9 months that they're comparing it to. So that big jump, it is big, but it's coming off a low base, so it might not be as powerful that might look on first glance in terms of strong. So all right, so I want to share my screen for a second. I want to see if I can go through this real quick. So what I want to look at right here, right? I'm looking at the Q3 numbers now for them, just the quarter, right? So just the Q3. So what you're looking at here is that you can see where the net operating income, right, is actually higher for this quarter. And a lot of that is coming from the insurance segment. So as they report in income statement, you have two major parts. So you have banking and investment activities, and you have the insurance activities, right? And when you look on the banking and investment, there's actually a marginal decline. But when you look on the insurance, there's a big increase here, which is 9.6 billion versus 4.9. So that's the big part of the gain, and a lot of that is coming from this line item here. So it was 2 billion, now it's 12.9. So that's the reinsurance and policy holders and annuities benefits. So that's a reflection of some changes that occurred with actuarial adjustments. So that's part of that helped drive that. And you can tell that there's some one-off type nature in it, or suspected, by the significance of the change, going all the way from 2 billion to 12. So that's the major driver there. And then when you look at the ultimate profits of the company attributable to NCB shareholders, that's actually 8.2 billion So that's a lot stronger, right? So that's 8.2 billion. But if you get, all right, so when you look at it quarter year over year, so that's June 2022 versus June 2021, right? You can say that there's a big jump. But when you look at it and you go back here now to June 2019, you can see it's actually not such a big jump compared to this number. And of course, June 2019 would have been before the real COVID impact start coming in on the numbers and hurting the numbers of the company. So again, off a low base. Granted, in the report that you cited, that's the 9 months number. So I'm looking at the 3 months, but this is a big part of the strength that you're seeing in the 9 months results. Is the strength in the most recent 3 months results. All right, so I don't think I have much time here, so I'm just going to skip along. Quick glance at the income statement. You're actually going to see a fall off in the equity of the company. So what you see here is that the equity attributable to NCB shareholders, that's at 1.46 billion, and that's down. So I'm zooming a little bit, and that's down from the 156.5 billion. Now, that decline is coming because of this line item. So the negative 17 billion. Now, this is fair value and capital reserve, which is kind of a reflection of when you have, and you see it in the income statement, below the income statement, you have the OCI with other comprehensive income, which is where when the company books certain assets, right, that they book it at fair value through OCI, meaning that when the value of the asset changes in the market, you don't see it reflected in the income statement. It's reflected below the line item, but it will show up in the balance sheet, right? So basically what happened is that a significant amount of assets that they have on the balance sheet actually declined in value because some interest rate spike and you had some fall off, and then you had some fall off in some bond prices that they held, and that pulled down the equity of the company. Now, the reason why I highlight that in particular is that you're gonna see what's happening. So when you look back here on the screen and you can see the performance of the stock, you can see that it's down. It's down big for the year, about 24%. But there's actually a positive rebound on the earnings, and you're seeing a fall back. Now, my estimates looking at these numbers, at least so far, what you're seeing is that it's a bit mixed. So you're seeing the strong earnings, but again, it looks like a lot of that is kind of coming from one-off type items. You look on the balance sheet and you're seeing a big decline. Now, again, so most of the things I've pointed out so far look a little bit negative, but I want to show something a little bit more important here. Now, when you look on the overall movement at NCB here, right? I don't know who can remember these good old days when NCB was, trading as high as
Absolutely remember it.
you
Yes.
remember
How
those
can
good
we
old
not
days, right?
remember that?
Those good old days, right? So you see where NCB is coming from, though. I don't know who remember these days when NCB was below 25. And now run up and it's coming back down here, but I don't remember who remember these days. Now, this is very important. Now, when you look on performance, if you zoom out a bit now, you look on the heat map, right? You can see in 2015 the stock was about 116%, very hot. That was of course the year 2015 when the market was extremely hot overall. NCB was a part of that, right? And then you're seeing strong performance for years, and then we're seeing these last 3 years of not so hot performance. Now, the reason why I show this, I want investors to get an appreciation of the full gamut of things here. So, there's a tendency in the market, and as humans, to have like a recency bias. So we're more, things more prevalent at recent. So you remember that right now NCB not hot, and you can see even in the liquidity at the start that is like nobody not really paying attention. But what happens is that you have to look on the full range of the investment opportunity here, right? So let me show you what that means. Now, when you look on the value, so look on this here, and I'm showing you the activity on the stock. So 2022, it's barely trading probably like $15 million on average. Now, this is a stock that used to trade like $80 million. Granted, there's some big transactions in that, but this was a stock that's extremely liquid. The liquidity you see in NCB now is a shadow of its former self, right? Because persons kind of have a recency bias and are seeing, the negative performance recently. A lot of persons looking at the junior market, that's doing very hot, and kind of forgetting about NCB. And you can see that showing up in the valuation. So if you look at the PE right now, 9.2 times X. Now, that's extremely low if you look on the average performance over the last year, 3 years, 5 years, and extremely low when you look on going back all the way to 2015 plus. So it's been a while since we've seen these valuations on NCB. You'd have to go back several years to see that, right? On the price to book ratio, you're seeing a similar thing. You know, for about years to see it. No, all right. So that's the final chart here. So I just want to show the full gamut. Now, when you're investing, again, you know, talk to your advisor and make sure that everything's in check and your risk tolerance. But when you're investing, there's different approaches. So you have the momentum approach, where persons, you know, you see something hot and everybody's looking at that. But you also have another approach, which is more what we call a contrarian approach and a more measured approach, meaning that you're looking at things as they come into good value. Now, again, if you look at NCB, one of the best times that NCB in terms of the performance run coming out of 2015, NCB was trading at half book, right? So book value was 30 plus and it was trading like 18, so it was trading at half book, right? Run up to trading at about 4 times book at the high, right? So now it's coming down trading at 1.52, but you can understand again with the recency bias and how persons look at it, because going into that run up to 4, you could not buy NCB fast enough in terms of how the sentiment was hot. But technically, from a valuation standpoint, that was kind of not the best time to be strong, have a strong sentiment. It's just from a valuation standpoint. Now it's coming into a place where the valuation is actually getting good, but the sentiment is not there, meaning that person not really paying attention. So I think for someone with a longer term perspective, someone that, you know, the company is making the right moves overall, they would be in a better position to take a look on this thing and probably, I mean, not aggressively necessarily, but slowly add into the position here, because I think it's a decent setup. Valuation is coming in. The company is actually performing. There is some, you know, mixed things you saw where the book value is down. But again, I think that might be a temporary blip. I think there's likely to be a rebound of that soon. And in the earnings, granted, the spike in the earnings have some one-off nature, but the underlying core earnings were still pretty decent. And, you know, there's improvement there. So I think it's moving in the right direction, but I think investors are kind of, you know, focusing on the hot things and forgetting about, you know, the value that's presented here. So,
Oh, but
yeah,
Khalil also makes an interesting point. Khalil says NCB needs to give us dividends and the good old days could
yeah.
return.
All right. So,
So
so
that's
this is the
that's
thing.
also a factor. That's also playing
It,
a
it,
role.
it is a factor. So they've, and I think their rationale for withholding dividends for now, I think, is pretty good. Basically showing up the capital base of the company, I think is good. So I do understand that point, and that's a fair point. So you see where, for example, like Scotia is constantly paying dividend, but if you realize with Scotia, you know, the amount that they're paying per quarter, is actually less than before the pandemic. So it is a strategy that you're seeing kind of deployed, at least with NCB here, and to some extent with Scotia, where they're actually pulling back on the dividends for a while. And I think that's fine if they do it for a few years. And then, of course, they pick up back, when things better, they're sure. Because again, you know, you have recession talk out there, you have, you know, little risk out there. What you don't want is to pay out that dividend and then, you run into capital issues. So I think the strategy that they're deploying, at least for now, I think is actually a good one in the long term. So in the long term, I think it's actually better. But yeah, it's a fair point because people love them dividends.
Thanks so much for that analysis, Leo. You made some great points, excellent analysis as usual. And you also mentioned the word that Keisha is now going to touch on. By the way, my neighbors decided to start party. So if you guys hear music in the background, somebody having a party in Runaway Bay tonight. But Keisha, recession, to be or not to be?
Right.
That is the question. I see you posted a video on IG and TikTok about this earlier in the week. Is the US in a recession or not?
Well, so when we look at the technical definition of a recession, which is 2 consecutive quarters of negative GDP growth, we are there. Technical. However, we have a lot of different sides of the argument coming up from a lot of the US politicians and economists saying, well, you know, we have the technical signs of a recession, but we are not quite there because we need an official declaration from the National Bureau of Economic Research, NBER. So because we don't have that official declaration, we can say, well, we're not quite in an official recession, but a technical one. But there are 2 sides of the coin. When we look on the factors for recession, we have that technical data where we have 2 consecutive quarters of negative GDP growth. We have also rising prices, with inflation being a problem this year. And we also have product shortages because we have the Russia-Ukraine war still going, and we have supply chain problems, even though those are easing up a bit. On the flip side, on the negative side, we have persons saying, well, the job market is still growing. We have low unemployment, the lowest unemployment in the last 20 years, and wages are still going up because we have inflation. So because wages now have gone up by 6%, which is the highest since 1998, we're seeing different sides. I've even seen media reports saying, well, it's the lower income classes that are in a recession, but the higher income classes are not because their spending habits haven't changed. Regardless of either us being in a recession or not, we still have to be prudent because looks like a recession, sounds like a recession. It likely will be, maybe not in this present moment, but later this year or early into 2023, we could have that official announcement. So just making sure we stay ready for that.
So is it that they're just playing politics with the definition, Keisha? Because like you said, looks like it, sounds like it, all of a sudden the definition change. Is it just for political reasons why they're denying it?
And also to tame the markets, because once we do have that official declaration, we will have investors panicking, and some investors may then go into a selling frenzy. And because the first half of this year on the international markets have been the worst since 1970, we do want to come out from that. So maybe that's also in play behind the scenes, that let's try and slowly have a rebound. Let's bring some normalcy back to the markets. And so things are still good. That's the narrative out there. Things not so bad. Yeah, we have 2 negative quarters, but they're in the past. Looking forward, things may look a little better. But I stay ready because I do believe at some point we are going to get that official announcement. So the opportunities will come at that time.
I like how you think, Keisha. You ended by saying the opportunities will come at that time. I'm gonna leave it with a comment here coming from, who was it? From Javon Russell on NCB. He said, Leo, investors are interested in 2 things: capital gains and dividends. If a company isn't providing both or either, they're not making dollars and cents. What do you think about that?
That is true, because all right, so those are the 2 main ways to make in the Jamaican market, those are the 2 main ways to make income from a stock, or gains, right? That being said, so we know, especially on the junior market, you have a lot of names that are not paying dividends, but you get capital gains. But as we know, again, capital gains are relative, because remember, if you had bought NCB at $18 when it was a half book, you would still be seeing significant capital gains. If you had bought NCB at $200, then you'd be seeing significant losses. So I mean, it's relative, and you know how it goes with capital gains, in the sense that it's very volatile. So this year you make 100%, the next year you might lose 50 or 20, right? So I take the point as a technically accurate point. But that being said, though, it is the nature of stock investing, where I remember the bulk that the returns for most stocks is not even dividends. So even at the highs, not the highs, but I mean in more recent years, let's say over the last 4 years, NCB's dividend yield, I don't think exceeded like 4%, but in any given year, especially when it was performing, it would do like 50% in cap gains. So the majority of the actual income or returns that the investors saw was really from capital gains. So that's the primary reason why you'd invest in a stock like NCB, and majority of listed entities is for capital gains, and it's technically not happening right now. The point is to realize when it's going to come, or when there's the chances of it occurring are increasing, is what's important, than what's actually happening now. So again, for the last 3 years, negative, but that's not stopping or guaranteeing that next year, as in 2023 calendar year, who knows, the stock could be up 50%. So that's the thing. So so I mean, technically correct, but that's what we're trying to do here. Trying to basically make the best estimates to see how we can forecast when we can probably see some material capital gains on returns. That's the aim of the game.
All right. Well, thank you so much, Keisha. Thank you, Leo. And we're going to wrap there, take a quick break, and we'll be back with final comments.
All right. Bye.
This segment, The Analysts, was brought to you by Jamaica Money Market Brokers.
Hey, moneymakers, you're not an official part of the family until you have your merch. Visit KalilaReynolds.com/store to order your t-shirt and your mask today. Let's get this money. All right, so we're gonna leave it there. And I was just trying to ask Doyle a question. Doyle is from JMMB. He was on in our first segment. And quick question, Doyle. I noticed he's still on. How do people in Barbados participate? Is it through JMMB only? If he can still jump on, I
Uh,
don't know.
yes, it can be done if you have a GMB account, or you can open a GMB account in time. The offer will actually be open until September 9th. So if you can open an account and fund, you will be able to buy it via GMB or the Boss Veritas Boss system.
Okay, no. So JMMB has offices in Barbados.
I don't believe we have offices as yet.
Okay, so just do it online.
Online is the best.
All right. Thank you, Doyle. Thanks for jumping back in really quickly there at the end. And thank you, our viewers, for watching yet another week. Make sure that you like the video, of course, subscribe to this channel and share this video with a friend. Also subscribe to my newsletter, KalilaReynolds.com/newsletter. You get all these investment alerts directly to your inbox. And the thing is, when you follow on social media only shows you a very small percentage of posts that are made each day. That's why you guys always message me about, oh, when are you going to talk about this? When are you going to talk about that? And I'm like, I posted that 2 days ago. It didn't show up in your feed. And that's just the nature of the algorithm on social media. It doesn't show you every single thing from every single person that you follow. And there's a reason for that. But if you subscribe to the newsletter, all the major alerts are going to go directly to your email inbox. So you can subscribe today at KalilaReynolds.com/newsletter. Also reminding you that email subscribers get a free copy of my broker guide, which provides a comparison of all the brokers in Jamaica. And turn the post notifications on. That also helps with you getting the alerts on time. And we want to help people learn more about money so that we can all get this money together. I learned something new from this program and from this particular offer. The we call it perpetual cumulative redeemable preference shares. That one was new to me, and I'm sure it was new to quite a few of you as well. Two very different offers coming to market this week, both opening on the same day. We have the one-on-one educational services IPO. So we're looking at a smaller company listing on the junior market, a potential growth stock for people interested in price appreciation versus a much larger company, much larger company. Both tech companies, by the way, both of them are in the technology sector. Well, we have PBS listed on the main market, 224 million US dollars in revenues versus about 200 and something million Jamaican dollars for one-on-one. I'm not laughing. That's a great achievement for them. But yeah, I'm just comparing the size of the two offers. So you have, like I said, one-on-one being a growth company versus PBS being more, I'd say probably on the stable side, and giving you attractive dividends, offering attractive dividends for those of you who want the consistent dividends versus if you're interested in one-on-one, you're looking for the capital appreciation, the rise in the stock price over time. Because preference shares, well, as you can see in the comments, David was making some comments. They do trade on the market, but in terms of the capital appreciation, you're not very likely to get much of that, possibly until closer to the maturity date, which in this case is not going to be before 15 years. So for quite a long time. Reminding you also to follow me all over social media. I'm on Instagram, on TikTok, and Twitter at Kalila Ray. This is my only official page. I also have at KRM_business news. Anybody else contacts you pretending to be me, it is not me. It is a scam. Please report those pages. And if you want to connect with the analysts this week, check the description box below for their contact information. And Keisha, I have somebody in the comments saying that They have a stone for you, a big stone. So please check the comments, Keisha, and contact this person as soon as you are able to. Also visit my website, KalilaReynolds.com, for financial information you can use however you like it. You can watch, you can listen, you can read. We do have our podcast, which streams on all major podcasting platforms. We're on Spotify, Apple Music, Amazon, Audible. I can't remember all of them. There's so many of them. Yeah, like I said, I can't remember them all, but you can check it out on all major podcast platforms. If you don't have the time to, watch on YouTube, you can listen to it while you're driving, while you're out for a run, and we appreciate you, however you choose to consume our content. And of course, we encourage you to tell a friend about taking stock. Why? Because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. See you later.
Let's get this money.